the stock of the day, look, there's not a lot of corporate news out there, as I said, so I put a little bit of a shout out to the Twitter sphere, and I just asked, look, there's no blindingly obvious. I think we've got the graphic. News related stock of the day for the call. Any solid requests? Well, thank you everyone for getting back to us. A lot of you had requested Paladin, but Paladin was of course the stock of the day yesterday. You can go back on the website, either watch the edition of the call, or I'm not sure if you're aware, but there's a rail, you can scroll down on the screen, and every day we post the stock of the day discussion in full. So if you were after Paladin, I'm sorry to disappoint you today. That was yesterday. So with retail sales data in mind, and with inflation in mind from yesterday, and the questions about the RBA next week, I thought let's do a retailer. And thanks to, forget your name, who nominated Universal Stores, that's what the stock of the day is. So Mark Gardner, out with a trading update last week. It didn't provide guidance at the previous result, did provide guidance in that trading update, and clearly the market was unnerved.
Yeah, it was down about 21% on the day. And it was really one that people were thinking they were taking a little bit of safety in, because it was, we thought,
youth.
Youth and small purchases wouldn't be affected. And you can see that in the retail trade numbers as well, is the department store sales and things like that have been fairly resilient overall. It's probably where most of the retail sales growth, because those numbers have been beating expectation fairly consistently. When then obviously the larger items have been the items in the retail sales numbers that have been getting hit. So it was one that people were, I think it took, the savvy, if you're investing in that sector and you know it well, that'd be one where you thought, well, I think Koshi calls it the lipstick purchase. It's a very old analogy. Is those small things. Treat yourself to a little thing. So, but obviously, yeah, we're starting to see, even the younger generation have constraints on their budgets. Whether it be parents or rising rent if they're students or whatever. So yeah, look, retail's not really a sector we're allocated in much of the all at the moment. Even with consumer discretionary, we've got a smaller than normal holding in Wesfarmers.
Wesfarmers shares were battered yesterday. Even Premier Investments yesterday was down significantly.
Yeah, so, but one thing that will be, they're quality companies. We've got some of the best retailers in the world, in Australia. I just think, consumer discretionary is the part of the market that performs the worst when we hit the recession. So in the US particularly, so probably just best to, we've sort of been advocating, make a shopping list of those companies that you really want to buy, excuse the pun for the retail, but make a shopping list of those companies and just set levels where you want to buy in, because they'll be the best buying opportunity for 2 or 3 years once we cycle out of this. But we've been talking about this recession forever, but it's likely to materialise in the next 3 to 4 months.
It's interesting when you talk about levels, because even in the wake of that trading update that came from Universal Stores last week, we did see a couple of the brokers either maintain their buy ratings on the stock, and one of which was Morgan's, who said, yes, it will be difficult conditions lingering into next year, but it's got a current low valuation and an attractive dividend yield. Or are Bell Potter analysts just saying steer clear of the discretionary space?
No, we do actually have a buy on one. Again, it does pay a dividend. Accent Group is our choice in the retail space. We have a hold on other retailers like Best and Less, City Cheap, because of inventory levels. So when we're looking at retail stocks, we look for inventory levels, we look for headwinds and high rental costs. The thing about Universal is they have high rental costs, and which is inflationary at the moment with the RBA's interest rate hikes. So again, there's a high cost that they're bearing, and also with the expectation of consumer spending to come down, the Accent Group is not in the Universal stores are not in a great position to weather this storm. Whereas the Accent Group is the reason we have a buy rating, because they target the younger demographic, like the Universal stores, but Universal's is slightly higher age group. The Accent Group is like the sneakers, TikTok age group, buying sneakers with their first paycheck, no cost of living pressures at all. So that's why we like the Accent Group. And they've got lower inventory levels. They're really digitally integrated. So they've got 750 stores, 40 websites, 35 brands. They cover most of the field. So in the retail space, it's about diversification for us, and obviously healthy inventory levels as well.
Thank you, guys. I'm going to call that a bonus buy. First of the day, Accent